Hey, this is Sasha. Thanks for joining me in today's video. And in this video, I'm going to share with you 7 reasons why most people will never become rich or wealthy. Stay tuned. You'll get some insight from here. All right, so if you're looking to build your wealth, build money in your life and really attract it, pull it in, and have it for the long haul, there's a couple of things that you need to be aware of. And there's a lot of things really that you could do on a small micro level, but I'll share with you some big picture concepts here of things that people do wrong or don't have the right mindset about when it comes to building wealth. Now, before I do that, don't forget to check out MyLittleNestEgg.com. That's where I have a lot of other great freebies similar to this video and many other getting started pages that you could really ramp up things in your personal financial life. Anyways, so let's get started here with reason number 1, and that is they have no passive income streams. So what happens is a lot of people that look to become rich or wealthy, they might just go ahead and work on a per hourly basis. And if you're working at $10 per hour, $20 an hour, even $50 an hour, if you have no passive income stream coming in, like in a form of dividend or part ownership in a company, if you don't have that coming in, that could be a huge problem. You won't get wealthy because you're not having your money work for you. In a way, you're not having your money generate and duplicate in a good way like many other people in the world. So the rich that do have money working for them continue to get richer and wealthier. So having passive income streams is very important to be able to go ahead and that's why there's so many articles and videos about passive income. Okay, number 2 is prioritizing liabilities over assets. And I see this all the time is that people prioritize liabilities over assets. And I'm talking about basically things that, when I say liabilities, I'm talking about things that go down in value over time. And when we're looking at assets, they go up in value over time. We're not talking about the financial accountant point of view where, hey, a car is an asset. In theory, you could say, yeah, a car is an asset, but does a car go up in value over time? If you buy a brand new Honda today, in 5 years, is it going to be up in value? Will you be able to sell it for more money or less money? You'll be able to sell it for less money because you're using it. It's an asset that depreciates in value. That's the accountant terms. In my world, when I look at personal finance, it's really a liability. It's a thing that costs you money. So anytime you go ahead and focus on liabilities, I want a new car because I want to look better. I want a new watch because I want to, be able to tell time even though my cell phone has it. I want to be able to have nice shiny clothes because I want to look good. All these things are liabilities. They're in a way depreciating. Whereas when you look at, buying more real estate as investment properties, looking at buying rare coins or gold or investing in the stock market, this is much more worthwhile to where your money starts to appreciate over time. That's an asset. A liability is going to depreciate in time. And this is what leads people to really having credit cards and debt. That is another big issue where a lot of people fail. It's because they go ahead and if they make $100,000 a year, they're spending $120,000, $150,000 because they want a brand new boat, a brand new car, new outfit, new watch, new phone every single time. That's a problem. If you're spending more than you're making, you're in the negative. It's a pretty simple formula in life. If you've got $100 and you spend 120, hey, you're down. That's as simple as it gets. So in either case, if that starts to accumulate and you got credit card debt, all of a sudden you might, rack up 20,000 in debt, 40,000, 100,000 in debt, and that starts to cycle. And the more you make, the more debt you can get into because they'll give you more loans, meaning the banks and other loan advisors and loan people who are looking to take your money. Okay, the next thing is short-term focus. This is where a lot of people go wrong when it comes to investing or just looking at money. Money grows with time, and a lot of people, what they do is they look at the shorter term. Hey, how much can I make this week? How much can I make this month? They don't look at the long term in terms of years. And I'll share this with you. When you look at my other business, we focus a lot on this Traders Fly channel. This is a lot on investments and growing your money through the stock market. And what happens is a lot of people here, they get into kind of day trading and swing trading. And a lot of that is really all about short-term gains. When really, there's nothing wrong with day trading and swing trading and investing in the stock market. But the point is that people that do this, they're looking at it from a short-term perspective as I want to make money every day, when in fact, if you break it down on a month-by-month basis, you should be looking at it more like that, because now you're looking at it in a long run. And you can check out the channel there at Traders Fly if you're interested more in that. Okay, let's look at the next thing, and that is looking at not taking calculated risks. So people who make money from money, or people who invest, it's not that they're fully scared of investments or things will collapse. They take risks, but they take calculated risk. I'm not saying you have to blow your money on a lottery ticket and blow $50,000 on lottery tickets or Powerballs. I'm talking about, hey, there are risks, whether you buy a business, whether you invest in a company, whether you start your own business, whether you invest in your own skill sets. You go ahead and look at the stock market. You look at all these real estate properties. There's always a risk. But looking at a calculated risk is what's important, because some people, what they say is, I don't want to, that's a risky thing to do. I don't want to do it. I don't want to take the chance on it. And if you don't take chances on things, well, you'll just kind of be stable in equilibrium of where you're at. You'll never continue to grow. So taking a calculated risk is important. Taking certain risks. I'm not saying you have to take high risks, but taking some risks is important to be able to continue to grow. All right, and the next one is not investing in themselves. So people may say, hey, well, I get this a lot actually on this channel quite a bit. They say, well, your courses are too expensive. They look to go ahead and, buy some of the courses, but then they say, oh, that course is a little too expensive. I don't know if I want to pay that kind of money. Then maybe a year later down the road, they say, hey, I lost $15,000. It's like, well, they didn't invest in themselves. So if you invest in your own skill sets, in your own education, in your own knowledge, in personal connections, that can really ramp things up. But what most people do is they say, well, I don't want to pay that kind of money. I don't want to go ahead and invest in that. And in reality here, you're talking about doing an investment of $20,000, $50,000, which you're looking to put on stocks and positions, and you don't know what you're doing, and you don't want to spend money on $100 or $200 on a course or discussions and collaborations. You don't want to do that. That's kind of like, hey, I want to become a doctor, but I don't want to go ahead and, spend $50,000 on my education or $200,000 on my education. Yeah, you might be making $500,000 a year after that. But yeah, I just don't really feel like spending that kind of money. So that's the problem, is that a lot of people, they don't want to invest in themselves unless it's kind of like a regular education, a college education, where in a way it kind of guarantees them something stable and then they kind of get cycled in. But even then with college, remember, you're not guaranteed a job afterwards. I know plenty of people that graduated from college that don't have a job afterwards. So be very careful with this concept that you think, hey, I might be investing in myself, but that doesn't guarantee you anything. So don't go too cheap on yourself. Invest in different ways for yourself, because that'll really grow you, and it'll grow you as a person. If you can be open-minded, it'll ramp things up for you to open you up in new perspectives. Okay, so that's number 6. Let's look at number 7, and that is their mindset and belief. And if you believe, hey, I'm not going to be wealthy, it's kind of like you're pushing things away. In a way, it's kind of like saying, hey, I want to go ahead and lose weight, but not really. I don't really want to lose weight. I think it's going to be too hard. It's not really something that I can really do that successfully. So you're starting to push things away. Already you're looking at, hey, the gym is really negative. People look at me a little funny. So you're already pushing that away, that, hey, you're not going to go work out. And it's the same thing here. It's, wealthy people are bad. Wealthy people are evil. And if you have that kind of mindset, then you yourself aren't going to want to be wealthy. Because why would I want to be a wealthy person if my belief is that wealthy people are bad, wealthy people are evil? So when you do this mindset and you think about things in this way, that's a really bad situation to be in, because you naturally are going to push those things away, even if they're subconscious, and you're saying, no, I still want to be wealthy. I just, don't want to be one of those wealthy people. So be very careful with your mindset of how, you've been programmed and raised. A lot of people, let's say when they were younger, if your parents yelled and fought about money, maybe it's not something that you want to be attributed to having more money, because you're thinking, hey, it's going to go ahead and create conflict in my life. So be very cautious with your mindsets and beliefs. If you think about those things in more of a positive way, it'll attract that coming back into your life. So anyways, those are kind of the 7 main tips here that I have for you. Highly recommend and encourage you guys to check out the My Little Nest Egg right here. website. Check out some of the getting started pages and some of the great freebies we have, along with some of the resources, a lot of great PDFs to download. And if you're interested in investing, check out our other channel, Traders Fly, there as well. So thank you so much for joining me. Get those freebies right here. Check out other great videos and subscribe to the YouTube channel so that way you don't miss other great, valuable, and financial information. Thanks again, and I will see you next time.